The Securities Commission Malaysia said its assessment on several large related party transactions, ranging from 250 million to more than 3 billion, suggested that such transactions involving public listed companies within family groups and those with long-serving independent directors may require closer monitoring to ensure that these deals are not detrimental to minority shareholders. There were also instances where issues and concerns related to RPTs were uncovered by auditors of financially distressed companies, said SC in its 2021 annual report. Given the prevalence of RPTs among Malaysian PLCs, SC said boards of PLCs, particularly the independent directors and audit committee, must establish effective processes and controls to prevent detrimental RPTs and ensure the decisions made on those transactions are in the best interests of the PLCs and its shareholders. Meanwhile, total funds raised in the capital market remain robust in 2021, rising 14.2% to 130.9 billion from 114.6 billion in 2020, above the 5-year pre-pandemic average of 121.4 billion ringgit. Of that, 16.6 billion was raised via the equity market, up from 10 billion in 2020, while 114.3 billion was raised through the corporate bond market, compared with 104.6 billion in 2020. In the equity market, 2.3 billion was raised via 29 initial public offerings and 14.3 billion through secondary fundraising. Alternative financing avenues via equity crowdfunding and peer-to-peer financing continued to gain traction, increasing to 1.4 billion in 2021 from 640.4 million in 2020, especially in supporting the needs of micro, small and medium enterprises. SC Executive Chairman Datuk Syed Zahid Albas said the sustained economic recovery seen the world over bodes well for the domestic capital market going forward, but warned that external risks such as the ongoing Russia-Ukraine conflict could upend current recovery expectations. On the fundraising pipeline, Syed Zahid said that this will continue to pick up and the SC is expecting a healthy pipeline of around 35 IPOs this year. He says that the SC has also received interest in SPACs, but that it is still too early to tell whether any of these special purpose acquisition companies will be listed in 2022. Health Minister Kairi Jamaluddin says that all MySujatra app data is fully owned by the government and there is a non-disclosure agreement in place with its developers. Kairi says the data was protected even though there was no existing contract with the developers. He says the custodians of the data have always been the National Cybersecurity Agency, the National Security Council and the Malaysian Administrative Modernisation and Management Planning Unit. Kairi says the issue at hand was the maintenance of the platform and noted that the MOH would always ensure that the data was not compromised. The minister doubled down and said that the data is not being shared with private parties and it is only being used for the purpose of public health. MySujatra was created by KPI Soft, now known as Entomo, as a corporate social responsibility initiative. However, it was subsequently sold to MySJ. Kairi clarified that negotiations with KPI Soft started when he noticed there was no contract and he wanted to regularize this service as it could not exist as a CSR service indefinitely. He said post KPI Soft's name change and sale to MySJ, it was when the government started discussions with MySJ. The minister added that the amount that the government is negotiating with MySJ is much lower than 300 million. Kairi said that they hoped the negotiations would be successful, adding that should the talks fail, the government would choose another vendor. To clarify, over the past couple of days, both Datuk Sri Anwar Ibrahim and the Malaysian United Democratic Alliance had raised concerns over MySujatra data being sold to private companies. MUDA in fact wants the government to guarantee that the data gathered using the app would not be used for commercial purposes without the consent of its users. AirAsia has settled over 90% of passenger refunds thus far, according to Capital A Chief Tan Sri Tony Fernandez, adding that it should not be an issue for the group to settle more of these situations in a few months. Bernama quoted Fernandez as saying that this was a remarkable achievement because it was done without any financial support from the government and the huge amount involved compared to other airlines, as AirAsia was flying about 90 million people during pre-COVID-19 times. He was quick to draw a line between AirAsia MySejahtera and AirAsia, saying that AirAsia has handled over 90% of refunds and it was not an issue as the group had been transparent. Fernandez elaborates that its guests have been supportive, although there have been some noise and press about it. He says the airline is seeing strong backing, whereby it has performed beyond expectations in most domestic markets. According to him, refunds will be coming as flights resume, where in Malaysia this will happen within a couple of months, while for the Philippines it will be within 6 months. Fernandez says AAX's guests would also be getting vouchers when the airline starts flying as a gesture of fairness to the low-cost long-haul carrier. He was speaking to reporters at the virtual launch of AirAsia Super App's new Super Plus plan. Fernandez says this is the first pass that combined flights and food delivery for a year in a single package, which he described as their equivalent to Amazon Prime and Netflix, and superseded all unlimited passes that were introduced earlier. Lead market-listed LSH Capital has announced a series of corporate proposals that will pave the way for its proposed expansion into the property and construction segments. In a boss filing, LSH Capital says it will have an enlarged secured construction order book amounting to 1.1 billion with an overall outstanding order book of 782 million upon completion of the deals. In addition, it will also carry out a property development project with a GDV of 1.59 billion, which is expected to provide earnings visibility until 2026. According to LSH Capital, the exercise entails a combined acquisition value of 157.6 million via the execution of share sale agreement to acquire 100% in Astana Setia for 95 million, assets exchange agreement and debt settlement cum share subscription agreement with LSH Ventures for a total value of approximately 62 million ringgit. The transaction will be fully satisfied via the issuance of new LSH Capital shares at 45 cents apiece, which represents a premium of 7.14% to 9.2% over the closing price on March 25th. Non-executive chairman Tan Sri Lim Ken Cheng says that the company will also seek shareholder approval to expand its core businesses to include property and construction-related business, as these new integrated upstream businesses are expected to contribute more than 25% of the group's net profit moving forward. He says the latest exercise puts the group on the right track towards strengthening its presence in the local construction and property development sectors to become a billion ringgit company in the long run. Troubled Sapporo Energy has appointed restructuring specialist Cosimo as its non-independent and non-executive director effective March 25th. In a Bursa Malaysia filing last Friday, the group said the Australian specialist is currently the leader of the Asia-Pacific and the Caribbean restructuring practice of Kroll. He is also a well-known restructuring and insolvency practitioner in Asia, having worked exclusively in this area since 1990, according to Sapporo. According to the announcement, Borelli's assignment often have a cross-border focus, including Hong Kong, China, Singapore, India and Malaysia, among others. For context, on March 18, Sapporo saw its net loss for the fourth quarter of FY22 widen to a staggering 6.61 billion due to a series of impairments, while revenue nosedived by 69% to 453 million from 1.44 billion previously.